If you bought a home in 2025, this tax season could look different for you because there were real changes in the tax law. And if you don't know what to look for, you could miss something and pay more in taxes than you need to. Hi, y'all. It's tax season 2026, and we're filing 2025 taxes right now. There's a lot of changes this year. With updates under the One Big Beautiful Bill Act, homeowners need current information, not advice from an old Reddit thread. I am not your CPA, but I am your mortgage lender, and I want you to be informed and prepared for keeping as much of your money as possible. Let's walk through some real questions. What is the SALT deduction? Why did it change, and why should you care? Yes, it changed, and this is a big one. You may not have heard the word SALT when it comes to your taxes before, but SALT stands for your state and local taxes. That simply means the property taxes you pay on your home and the state income taxes you pay on your paycheck. Before 2025, you could only deduct up to $10,000 total of those combined taxes. Now, for 2025 tax returns, that cap is increased from $10,000 to $40,000, depending on your local income taxes. That's a major shift. So if you paid $12,000 in property taxes and $15,000 in state income taxes, before you were capped at $10,000. Now you may be able to deduct much more, up to $1,000 if you itemize and you qualify. There are income phase outs at higher income levels, so you have to calculate that with your tax preparer. But this is not a small tweak. It's pretty significant. Is mortgage interest still deductible? Yes. Mortgage interest is permanently deductible on up to $750,000 of the loan amount you used to buy your home, as long as you itemize. In the early years of mortgage, most of your payment goes towards interest, not principal, and that interest might be deductible. Are discount points that you paid to buy down your interest rate deductible? Yes. If you paid points to lower your interest rate on a purchase, they're often deductible in full for the year that you paid. So if you bought a house in 2025, they're going to be deductible this year on taxes. On a refinance, they're usually spread out over the life of the loan. You'll need to distinguish if you bought what the seller may have paid from what you paid, but it's definitely worth looking into with your tax preparer. This is a big one. Is PMI or private mortgage insurance deductible? Yes, private mortgage insurance, the monthly insurance you paid if you put less than 20% down on a conventional loan, or if you have a government-backed loan like FHA or rural development, it is once again deductible. This is a big deal because PMI or mortgage insurance costs are one of the biggest questions I get from home buyers. Now you can deduct them. Of course, they're subject to income limits like a lot of the deductions on your taxes. So if you paid PMI on mortgage insurance in 2025, you'll have another deduction option on your federal taxes. What if I use part of my home for business? If you're self-employed, not a W-2 employee, and if you use part of your home exclusively and regularly for business, you may qualify for a home office deduction under the IRS rules. That means that you may get to deduct a percentage of your mortgage interest, your property taxes, your utilities, your insurance, your repairs. The key words are exclusive and regular. It can't double as your guest room. So if you have a home office, then you need to look at it with your tax preparer and see what portion is going to be deductible for you. What if I converted my home that was my primary residence to a rental? If you moved out and you rent your home instead of selling it, then your tax treatment changes. There might be deductions for mortgage insurance, property taxes, insurance, repairs, management, and depreciation over time. That's a completely different tax conversation than just owning your home as a primary residence. Talk to your tax professional about what applies to you. I've had homeowners assume that buying a house didn't affect their taxes at all, and they thought that the One Big Beautiful Bill Act was just a political football. But as a homeowner, you have benefits for tax deductions, and you want to know how they can apply to you in your particular situation. I hope this was helpful. I'm Suzanne Cupid with Vessel Mortgage, and we are always here for you to give you peaceful and honest information, clear guidance, steady updates. We really care about you so that you can move forward with confidence. No pressure, no hype. We just want to give clarity. And if you purchased in 2025 and you need help gathering documents before your tax appointment with your tax preparer, give us a call, 504-949-0070. There's a calendar link below. And even if you didn't use Vessel Mortgage for your mortgage, you can still reach out. No pressure. We're just here to answer your questions and help you develop a plan.